Welcome back. You're watching Traders Corner, and as always, joining me in the studio is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I think US markets at the moment, which is where we'll start the show, as we normally do this evening, don't actually know what to do about Donald Trump's pronouncements over the last couple of days. So while we had that huge rally, things have really stuttered, and we're not really going anywhere.
That's 100% right. We've gone nowhere for 6 weeks. And when I say nowhere, I mean really nowhere. If you look at the chart of the Dow Jones Industrial Average here, you can see the big rally that we saw after Trump won the election back in November. And now we've been stuck in this range since about the 12th of December, I think. And for 6 weeks, we've traded inside a range of 1.5% on the US markets. And it really is, like you say, the markets can't decide which way they want to go, whether they're going to go up or down. There was very much a wait-and-see approach leading up to the inauguration of Donald Trump. Now that he's in the Oval Office, the market still seems equally confused. And I don't know. I mean, I don't know which way it's going to break. I suppose one side of me says, well, the fact that it hasn't fallen in a heap yet after his inauguration possibly is a good thing and might signal that there could still be a push to the upside, which is the case I've been making all along. But this sideways range has really been dragging on for quite a long time now. So I would hope we're going to get a resolution one way or the other out of the sideways range very, very soon.
And is it absolutely essential for us that we get some sort of break in the US markets in order to give us a bit of direction, or could you see us maybe decoupling somewhat?
Look, we've been rather decoupled anyway.
Yeah.
If you have a look at our market, I mean, here's the top 40 index, and you can see that since the beginning of January, we've actually had a very powerful rally, even since the final week of December, really. We've seen our top 40 index gaining about 3,500 points during that time. And that's that same time period where we were just looking at the Dow, where it's been going sideways. Yeah. So we have rather decoupled anyway. And I suppose that's due to our own unique factors. We've had resources shares running quite hard. So there's not much of a correlation between us and the US markets at the moment. Although having said that, if we look at our market over the last 8 and now today 9 trading days, we've actually been chopping along sideways, also without any major direction for the last, what's going to be 9 days today.
Okay, so those are the bigger picture views, the Dow Jones and the top 40 index. Let's now go back to last week's trade, which was your first international trade for the portfolio, Royal Bank of Scotland.
Yes.
And initially would have done very nicely on some of the comments made with regards to a hard Brexit, because the banks did very well, but what's it done subsequent to that?
That's right. On the day of the trade that we did, it actually did move out the gates quite nicely, and that I always like when we do a trade and it starts to work straight off the bat. That is usually a very good sign. I typically find that trades that do work straight off the bat are usually the best kind of trades, and often you'll get your profit fairly quickly. Now, what's happened subsequently has not been that encouraging. So let's quickly have a look at the chart and have a look at why we went into this stock. And it was really for technical reasons that we went in more than anything else. You can see the stock has been trending higher since October of last year. There's a consistent pattern of higher lows and higher highs here evident. And throughout January, we've seen the stock price pulling back in a very controlled fashion. And it's pulled back towards this upward trend. And in addition to that, there's a lateral area of support here at about £2.15, £2.10, somewhere there. And you can see the stock pulling back into that support zone last week. Also, your stochastic oscillator is very oversold now. So it ticked a lot of boxes in terms of getting long. And what we went and did last week was we bought 2,500 CFDs on our offshore account, because remember, these shares or these CFDs are traded overseas in London. We went in at £2.18, and we're looking at a stop loss there of £2.10, and our target £2.35. And you can see the risk to reward indicated by the red block being the risk, and the reward or the potential reward being indicated by that green block over there. And it all got off to a fairly good start, but it has been rather lackluster in the past couple of days, and it's actually come off a bit yesterday being Monday, and today being Tuesday, it's bumbling around a little bit again as well. And what does concern me slightly here is the potential that we might be seeing a head and shoulders pattern forming here. And if it starts to break down below the bottom of that dotted line there, which what we call the neckline of the head and shoulders pattern, then I would be quite concerned about this trade, and I would probably then look to exit it. And look, we've got a stop loss at £2.10 anyway, so that would save us from any major move to the downside. So I'm monitoring this very, very carefully. I don't know which way it's going to go, but as much as there is a head and shoulders pattern here, the possibility does still exist that we get a failed head and shoulders pattern, and a failed head and shoulders pattern would actually be quite a bullish setup. And that would happen if we started to see this share price taking out the top of this right shoulder over here, which is at around about £2.25. So if we started to see that share price moving up off of that level, then I would be quite encouraged by that. So I'm monitoring it. If, on the other hand, we start to see it breaking down below the neckline of this head and shoulders, then I would rather just get out of this trade and walk away. And we won't lose too much if I'm wrong. We took a risk of £200 if our stop loss triggers. And you never know, I might even cut it prematurely if it's looking like it's going to go lower still.
I mean, it's quite interesting to see how something that can be kind of a convincing technical setup when you enter the trade and a couple of days in starts to look almost like a convincing short.
Yeah.
I mean, if you had to say that head and shoulders might play out.
Yes.
Does it often happen, or I guess you just got to play what you see?
It can happen. Look, remember that all of trading is a probabilities game. So you do what looks to be the right thing at the time when you initiate a trade. But you've obviously got to remain alert to any changes in the landscape. And like we're seeing here, I mean, last week, Tuesday, I sat here, I was very bullish on the stock, and I thought it was a great buying opportunity. A week later, now we're sitting here, and I'm talking about the possibility that there might be a head and shoulders. And yes, it might look to break to the downside, which is completely the opposite of what we were discussing last week. But I think that's what makes you a good trader, is the fact that you adapt to the conditions. You don't try and force your views onto the market. You rather look at what the market's doing, and then you adapt your behavior accordingly. And if I'm wrong here, well, then I'm wrong, and we lose £200. It's not the end of the world. We'll move on and find the next trade. I'm not going to be one of those guys that gets hard-nosed about my opinion, and my opinion is all that matters, because if you like that in the trading world, you're not going to last very long. You need to be very adaptable. You need to be flexible in your approach.
Mr. Market does not hear your screams.
He doesn't care about your screams. No.
Okay, well, moving on to the next trade. It is actually a long position in MTN, and MTN's kind of gone nowhere for the last few trading sessions. Do you think it might be headed somewhere?
Well, it's looking interesting now. So we're bringing it back local this week. Obviously, we did an offshore trade last week. This week, we're bringing it back to South African shores. What gets me interested about MTN is the fact that it spent the last 6 months building this massive big base pattern. And you can see that clearly illustrated on the chart over there. And we know that MTN's been through a very tough time over the last year. They've had the fine in Nigeria and a host of other issues that have plagued the company. So, and the share price has been seriously punished because of all of that. But one also has to say, at some point, when is all the bad news going to stop? And when do we begin to look forward and realize that all of this stuff is in the rearview mirror and maybe things could improve going forward? And if I look at this chart structure, it suggests to me that there's a good chance that maybe we're getting to that point where the bad news is in the price, and maybe the market's beginning to look out to the future and possibly things being a little bit better. Because you've got this big rounding bottom that's formed over the last 6 months. It's a beautiful big base. And if you look at it just since the middle of October, you can see quite a clear pattern of higher lows and higher highs evident there. And what I like here is this break above that horizontal line, which is at 125 Rand. That breakout in the beginning of January this year was a bullish break and effectively puts the stock at close to a 6-month high. And now we've seen a pullback, and it's a nice controlled pullback towards the breakout area. And that's actually a falling wedge pattern that has been forming over there. So ordinarily now, I would expect that this lateral support area should probably attract some buying interest. And certainly that's what has been happening over the last couple of days. If I zoom in on that area that you can see there, that's sort of the bottom end of that falling wedge structure. I've zoomed right in, and you can see there is what we call a morning star reversal pattern. So that's where you've got these dark candles which indicate that that's a down day. Yeah. Then you get what we call a doji candle, which is that one I'm pointing out there now, where your open and close is equal on the day. And then you get a white candle there, which indicates that is an up day. So over the 3 days, you've seen a transition in the balance of power where the buyers have begun to wrestle power away from the sellers. And typically that we see as a potential buying opportunity when we combine it with other things. So obviously in this case, I'm combining it with the fact that there is support at this 125 Rand zone. Also our stochastics moving into oversold territory. It's the 200-day moving average there as well. So there's a bunch of supports in that area. So I take that as my cue to line up a buying opportunity. And then I'll put my stop loss below the lowest point of that reversal, below 124 Rand in this case, and you can see that's below that red line over there.
Okay.
And I would then be looking for the share to break to the upper end of this falling wedge structure and go and retest the recent highs at about 135. And I think medium term, it could possibly still go even higher than that. But that's what I'd be looking for in terms of a short-term trade for now.
Okay. Well, I mean, talk us through the trade, because you have put it, you've enacted it for the portfolio.
Yes, I have.
Details.
I've gone long at 126 Rand 99 cents today. Stop loss is 124 Rand. So it's a fairly tight stop loss. That's the one thing that does concern me a little bit, is that I might have put the stop loss too tight. But if it does get triggered, then it might mean it's going down to 120, in which case I'd then buy it again.
Because just maybe an interjection there. I mean, you've got the green and red lines. The red, is that the 50-day moving average? Because
yes,
that was a little bit further away.
Let's just quickly go back. So here's the red line. There's your 50-day moving average. That's what I'm pointing out now.
Yeah.
And that comes in at around about 120. And then your 200-day moving average is the green one, and that comes in at about 127 or so, where more or less where it's trading at the moment.
Yeah.
So there is a possibility that maybe it comes down to the 50-day moving average and flushes that, and then gives the buying opportunity again. So I hope I'm not too early here, but we'll monitor it and see. I'm taking a small risk position anyway, as you'll see now. So I'm risking effectively R2.99 per share. My risk is 1,000 Rand. So remember, we've got 100,000 Rand in our local account. 1% of that is 1,000 Rand. So I'm willing to lose 1,000 Rand if I'm wrong on this trade. And that's 1% of our capital. So I take the 1,000 Rand capital risk and I divide it by R2.99, which is our risk per share. And that works out to 334 shares. So I've rounded it down to a round number of 330 CFDs. My target is 135 Rand, and that means my risk to reward ratio here is 1 to 2.68. So we've risked 1%. We've got the potential to make capital return of 2.68% if I'm right. So.
Garth, often you talk about, well, you know, at the start of the show, you talk about a trade that works on the bats. You kind of bounce out of the gates, and you have a bit of money in the bag to start the trading year. It's maybe a slower start to this year, although I'd say last year was quite slow as well. But I remember 2015, I think you had a short on the currency, and that was fantastic because it kind of set you up for a few months at least.
Yes.
Does it sort of worry you that you almost, you know, you're compelled to make a profitable trade this early on?
Look, it is a little bit of pressure because we start from a new base every year, and it's nice to put some profits into the bank so that you've then got that buffer to work with on future trades. So yes, I do like to try and get out of the gates with a positive start, put a bit of profits under the belt, and then at least we've got that to work with. Last year was very difficult. We were in the red on this portfolio all the way until April last year, which was quite tough. And then obviously we came into the green and things looked very good for the rest of the year for us. So yes, there's an element of pressure this early on in the year because I do want to try and put some runs on the board. As you know, I love my cricketing analogies. I want to try and put some runs in the board so that at least I've got that to fall back on for any future trades that we do.
Yeah, okay, no pressure. So the portfolio as it stands at the moment?
It looks like this. So obviously we've got our two portfolios. We've got our local portfolio in Rands where we've got these 330 MTN CFDs. So we're sitting just shy of our 100,000 Rand starting capital, and that's really just a function of transaction costs to do this trade that we've done today. And then our offshore portfolio is measured in pounds. You remember we start there with £10,000. We've got our 2,500 CFDs in Royal Bank of Scotland at £2.18 over there. There's a small loss running there at the moment, but we're close to break even on that trade for now. Also, again, sitting just a little bit underneath our starting capital of £10,000. And again, that's mostly made up of transaction costs related to that Royal Bank of Scotland trade.
Okay, well, let's see how it performs in the week ahead. Your courses are starting this year in February.
Yes, that's right. I've got two courses coming up in Johannesburg in the beginning of Feb. So Understanding CFD's course on the 9th of Feb. That's a Thursday evening, and it's a 2-hour course. And then my high probability trading course is on the 11th of February. That's a Saturday. It's a full-day course. So if anyone is interested in attending either or both of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the details.
And then just to end off, people can get a heads up on the show, so they should subscribe to a weekly email.
Correct. We will always send out on a Tuesday afternoon, we'll send out whatever's coming up on the show. So if you'd like to subscribe to that free weekly email, go to traderscorner.co.za and you'll see a link in the middle of the page there to sign up for our free weekly email. It gives you a little bit of a heads up on what to expect on the show that week.
Okay, Garth, we have to leave it there. Thanks as always for joining us. Garth McKenzie's founder and editor of Traders Corner.